Let me show you how to enter a trade after a liquidity grab like this. Let me show you what I mean. Right here, look at this level. Can you see this level? This recent high? Price actually came down and then all of a sudden came back. Looking at this with the knowledge of the smart money concept, you know that this is an order block. Look at this area. This particular candle is an order block which we expect should return price and then push price down from that level. And if you're entering trade from this area, maybe from here, where your stop loss is going to be is right above the order block. But all of a sudden, you just had your stop loss got hit. So this thing is called a liquidity grab or a total soup or stop hunt. So what exactly is a liquidity? Liquidity is simply money, and it is in form of stop losses, buy stops and sell stops. You can find that on your chart time and time again. We had a break of structure at this level. This is our lower low now, this area. Why? Because we can see the body of the candles have traded below this line. Let me make it more horizontal so you can see. Let me get another line so I can put it right there. If you place your line right here, you're going to see that the body of the candle has actually traded through this. So if you're a smart money concept trader, what you look up to is for price to come back to an institutional reference point. Why? Because below here is where liquidity has been grabbed, external range liquidity. I've made a video concerning this. It's one of the most powerful video you must watch on my YouTube channel. Two types of liquidity, the external range liquidity and the internal range liquidity. So this particular one is a liquidity grab and it is an external range liquidity. They are mostly found below recent lows, relatively equal lows or relatively equal highs. These are the areas you're going to find liquidity residing in form of sell stops, stop losses and different things. So if price retraces back, it will look for an internal range liquidity. An internal range liquidity is in form of either an order block, fair value gap and liquidity void. So if price comes back to this area and then this order block could not stop it, and even this fair value gap, look at this fair value gap, could not stop price. Let me show you clearly. This fair value gap did not stop price. Even though this fair value gap has been traded into, we expect this order block to stop price from there and come down. But boom, we had a stop hunt. So if you see this kind of thing happen, this will happen time and time again. As you trade in the financial market, it's okay for you to be hit. Sometimes you have losing trades. Now, this is how to enter trade when such kind of things happen. If you see this pushes above and grab liquidity and then suddenly came back and closes inside the range, it means this is a liquidity grab. And how you can enter this trade is to simply jump from the time frame of your analysis to a lower time frame. You're going to have a perfect entry. Right now I'm doing this analysis in 4 hours. Now I will jump down to 1 hour time frame. That's a time frame lower than what I'm doing this analysis on. So I'll go to 1 hour time frame and then I will find that level. So let's get that level properly. So look at this. In the 1 hour time frame, this is exactly what you're going to see. Let me delete this area so you can see what I'm saying. This order block that we marked at the 4 hour time frame, liquidity grab above this area, and then price came all the way trading into this level. You should observe this carefully. Overall trend is downtrend, that is the order flow. Now we have a retracement which is in form of an uptrend. This retracement you can see is creating higher high, another higher high right here. The retracement will always be in form of a short time uptrend if it is a downtrend overall. Now we have an uptrend. We want to see an alignment between that downtrend, that's the overall, and then the retracement. So what we look up to is to find a perfect change of character. Change of character simply means change in the direction of this uptrend. What we see here from here to here is an uptrend. We want to see something like this. Can you see break of structure, which literally is a change of character for us? This kind of incidence is what we should look out for. We saw that price have taken the last higher low. Okay, this was the last higher low, higher high, and if price traded through into it in the lower time frame, we can now have confidence to take this kind of trade. Even though you see these candlesticks are a bit noisy, we see these candlesticks are a bit noisy. We are looking at what is happening. Look at a perfect entry. You patiently wait for another movement. We have a break of structure again at this area, this level. Now price comes back to an institutional reference point at this level. This is a fair value gap. Can you see? After the liquidity grab, we have a fair value gap at this point. Let me delete this one so that it will not just have too much of drawing. So this area is your entry. You will always see this happening. Please don't get confused. This will always happen time and time again. So this area is your entry. If you take it back to the 4-hour time frame, you're going to see it. Can you see? This is your entry. It's not here. This is your entry. Immediately after seeing that incident, that's the liquidity grab, you patiently wait and look at it. If you entered from that area, from here to, let's start from this level, that's 81 pips, to this area is 122 pips. And if you are careful, it will reach even this level. So the liquidity grab will always come in the opposite direction. If you have your order flow as a downtrend, can you see? Now your time frame matters. That is where I told you jump from the time frame you're watching it to a lower time frame, and then you calculate your risks. Your risk is going to be according to the time frame of your entry. You're not going to put your stop loss from the higher time frame, so your stop loss is definitely here this time around, above this level. From here you entered, your stop loss is here, and you can see price actually played with your direction. Okay, so if you look at your chart, you're going to see this time and time again. It's not always, but you're going to see this happening. Okay, look at something here. I'm seeing something really interesting right here. Look at this. Remember, first is your order flow and your time frame. I'm using the 4-hour time frame. You have higher high, higher low, higher high, higher low, higher high, higher low. Look at a change of character at this area. Change of character. This is an uptrend, and now we are in a downtrend. Okay, we have lower low, lower low, lower high, lower high, lower low, lower low. We have created a downtrend, and then we have another uptrend here. We have another uptrend from here because we have taken this level. Let me just adjust it for you to see. We have taken up this level completely. So this is now an uptrend. We are no longer considering the downtrend because we have had a change of character. So look at what happened here. We saw price broke structure here, break of structure at this level, break of structure. Price came back to this fair value gap. Look at this fair value gap in between this level. Let me just map it out with this. This is a fair value gap. Price came back to here and tried to push, but look at this. We had a liquidity grab below this level. If you take this line, you're going to see it. Liquidity grab, just very small. That is a liquidity grab for us to make our decision. Very good one. And then it coincides with this order block. Okay, it coincides with this order block. Even though this order block has been mitigated, what that means is that price actually came and tested the order block. So it is not our area of interest now. We are focusing on this level. Below here, liquidity was grabbed, and overall it's an uptrend because from downtrend we've changed to an uptrend. So now we can jump to a lower time frame so we can have an entry. Now we go to 1-hour time frame and look for that area. Look for that area where we've mapped out. Okay, this is the area. Can you see it? Can you see what I'm having right here? Let me just reduce it so you can see. So you can see the liquidity grab. Now look at this break of structure at this area. Can you see a break of structure? This level. Okay, this is a break of structure. Price pushed above this level, and now it will come back to look for an institutional reference point. External range liquidity has been taken, and it came back actually to touch this area. This is another block. I hope you know this is another block. Now there are different ways people trade order blocks. Me, I just map the complete candle and I take trades from there. So this is your entry. After this liquidity grab, this is your entry, because this area is where you have a complete alignment. The retracement is always in the opposite direction from the main trend, which is a downtrend. From an uptrend, we had a downtrend, and now it came back to this level. If you are entering at this area, your entry is an area. You will take your first take profit at this level, which is around 78 pips. You take it to this level, it's around 200 and something pips. So this is the shortest video I want to show you concerning how to trade with that. You can check and see for yourself. Make sure that your liquidity graph is in your direction, is in the direction of your trend, not in the opposite direction. Something like this, can you see this? If you look at this now, this is an opposite direction because our trend is an uptrend, that is our order flow. We had a liquidity grab at this area. You're not selling this because your overall trend is an uptrend. So if it is something like you having something like this, can you see this is a liquidity grab because below this level is liquidity residing and there was a grab of liquidity. If you go to the lower time frame, you're going to see an entry in this. You will definitely see an entry with that kind of incidence. Below this level is a liquidity grab. Liquidity grab happens time and time again on your chart. Liquidity grab below this level, I'm just showing you where you can see it. Liquidity has been grabbed below this level, so you can find an entry here. You can see liquidity grab. Let me just adjust this so you can see properly. Liquidity grab overall below this relatively equal lows. So if you take your line and place it, liquidity has been grabbed, so you can find an entry here. So guys, this is about this video. Don't forget to subscribe to my YouTube channel if you want to see more of these kind of videos. Thank you for watching. See you next time.